Hey Bruin fans, want to go behind the scenes with your favorite teams and athletes? How about getting exclusive merch and opportunities to enter sweepstakes like sideline access at the Rose Bowl? Introducing Blue and Gold Society, UCLA Athletics fan membership program created to support Bruin student athletes. Members receive benefits like exclusive gear, videos featuring insider stories, and incredible experiences courtesy of UCLA Athletics. Sign up today at blueandgoldsociety.com.
Good afternoon. Getting right down to business here. We are doing it live, doing more at 4 weekday afternoons, right after Guy Benson and company at 3 and just before the 790 KBC News Blitz with Randy Wang at 5, Mottek On Money. And by the way, I'll be back on the air at 6 this evening and every Thursday evening at 6 with Mark Hood, the CEO of the Union Rescue Mission. Right now, Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com, and the on-demand Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, all your favorite podcast platforms. We have a winner today. Stocks moving higher after the White House announced President Trump would meet with the Chinese leader next week in Asia. That meeting had been expected for weeks, a potential path to de-escalating trade tensions that have been flaring up again lately over tariffs. The Dow came in for a closing gain of 144 points, the S&P 500 of 39, and the Nasdaq up 201 points. We did see the yield in the 10-year note move to 4%. The volatility index easing today by 7%. The price of gold's been all over the place this week, and right now down about $9, back to $4,137 an ounce. We'll be checking silver here as well. Let's see, down 18 cents or $48.53, and platinum just below $1,600 an ounce. We'll talk precious metals later this hour with Barry Stuppler, the go-to expert here. Barry Stuppler, founder of Stuppler & Company in Mint State Gold in Woodland Hills, former president of the American Numismatic Association. The price of oil hovering just below $62 a barrel now in New York, and in London, the Brent crude, which is the global benchmark, just below $66 a barrel. Energy prices have been rising this week after President Trump introduced substantial new sanctions on Russia's two big oil companies. Oil company stocks here moving higher for the most part. The sanctions on the Russian companies Lukoil and Rosneft are meant to show the president's patience with Russia is wearing thin as he looks for ways to deal with President Putin and pressure him into a Ukraine peace deal. The EU, meanwhile, approved new sanctions that'll ban imports of Russian liquefied natural gas starting next year. On the earnings front, we see T-Mobile, others reporting American Airlines shares moving up about 6% after the airline raised this year's profit target. Intel shares up about 7% after the bell as the company reported third-quarter earnings and revenue that exceeded analysts' expectations. Home sales up in September to a 7-month high after buyers seized on declining mortgage rates recently. That's getting the attention of Jeff Lazerson, the president of MortgageGrader.com, and also Orange County Register real estate columnist. Jeff Lazerson will be joining me live later this hour. President Trump's pardon today of Changpeng Zhao, the founder of Binance, who was convicted a couple of years ago of failing to prevent money laundering, may pave the way now for the world's largest crypto exchange to return to the U.S., according to some industry observers. Binance was banned from operating here a couple of years ago after the company pleaded guilty to violating American anti-money laundering laws and paid a large penalty of about $4.5 billion. Zhao stepped aside as chief executive of the company that same year, paid a fine of $50 million, and served nearly 4 months in prison in 2024 after pleading guilty to related charges. Cryptos have been all over the place this week. Right now, Bitcoin's up around 110,000, Ethereum at 38.46, Doge at the moment at 19 cents. Joining us now, Gabriel Wisdom, Managing Director of American Money Management, based here in Southern California, also author of Wisdom on Value Investing. Gabriel Wisdom, thanks very much for taking the call here this afternoon.
Well, thank you, Frank. Halloween is fast approaching. October traditionally has been, a tricky kind of month for the markets. All the major crashes seem to have occurred in October. Will we have a trick or a treat coming up when the Federal Reserve meets on October 29th? They're widely expected to reduce the federal funds rate, the interest rate banks pay, by 0.25%. But it could turn out to be a trick if tomorrow's consumer price index is reported hotter than expected. this is really the only report that I know of that is still valid since the government shut down October 1. The Bureau of Labor Statistics brought back some of its furloughed workers to publish this report. We'll see tomorrow. And then on the trick side, you've also got the Supreme Court might rule that Trump's tariffs are unconstitutional. We'll see. But there's a lot of uncertainty. I know the volatility index lightened a little bit. There's less fear than greed, but there's still a substantial amount of fear.
On the air live with Gabriel Wisdom with American Money Management. Certainly, we've seen the thrills and the chills this month in October here, and volatility certainly picked up, and we saw that washout a couple of Fridays ago in the stock market as well as in the crypto space. I was running into some people today, and some people expressed nervousness. And what are you telling the folks out there to deal with this kind of volatility we've seen recently with the PS, the major average is still hovering near record highs?
You know, Frank, the economy and the stock market, have had boom and bust cycles since the late 1800s. There have been lots of them, and they reoccur on average every 5 years. The last big one was, 2020, and it coincided with the COVID situation. Mark Holbert of MarketWatch, who I know you've had on the program in the past, he came up with something I thought was very, very interesting. When the Federal Reserve decides to make money more expensive, they drain the amount of money that's in the banking system. It's called quantitative tightening. And when that happens, you would think the stock market would go down and that volatility might go up because money's harder to get. But the exact opposite has occurred, as Holbert pointed out, over the last 50 years. And the same story in reverse applies in the past couple of years, certainly, where the Fed was draining liquidity, but we've had a great stock market. Now the Federal Reserve is talking about reducing interest rates, and what will happen? Well, based on Hubert's research, the markets tend to get softer, and we go into recessions. So this is a time of great uncertainty. What do I think is going to happen? I'd say expect the unexpected right now.
A lot of wild cards in the deck here, it looks like. And oil, meanwhile, moving higher. That, of course, it's been a blessing that oil was below 60 for so long, lowering gas prices. But, of course, not here in California. Right now, Brent is near 66 a barrel, and oil in New York just below $62 a barrel in the latest trading here. What about energy here and the nervousness now involving Russian sanctions and we did see a jump in the oil stocks today. What about oil here?
Frank, I've liked oil and the traditional energy sources, natural gas among them, as a hedge because the whole world needs them, and it will take many, many years, decades probably, to make any sort of a meaningful transfer to renewable energy. The Kremlin has really lashed out at Donald Trump. They've branded his latest move as an act of war against Russia. This comes from the former Russian president and a close ally of Putin, Dmitry Medvedev. He's warned of a looming threat of World War III. Well, that got the markets rattled. The Russian Security Council said there's every bit of reason why Russia could ruthlessly strike with various weapons at all the Ukrainian hideouts without looking back at unnecessary negotiations. In my mind, you want to own oil and gas.
On the line with Gabriel Wisdom, and what are your thoughts about this unusual volatility in gold lately, record highs, and then that massive pullback earlier this week? The same with silver and platinum. Haven't seen volatility like this in more than 10 years in the precious metals.
Well, that's right, but it seems like gold now is the physical Bitcoin. Bitcoin's been described as digital gold, along with some of the other cryptos. But the real physical Bitcoin might be gold. The central banks of the world seem to be accumulating gold. It is actually a currency of sorts. And so, it's risen dramatically, and that accounts for some of the volatility. Silver also is purchased for investment and industrial purposes. It's actually it's got more utility than gold because you need it for manufacturing electronics, automotive components, medical devices, solar panels, you name it. But it's far less valuable than gold because it's less liquid than gold. Everybody will take your gold, and I think that's what's happening right now. The risk is off, people are nervous, and gold is popular.
All right. All of a sudden, GM stock became popular, hitting a record high this week, hovering at around $67 a share here. Good old Apple hitting a record high in the last couple of days here, right now at around $260. Any thoughts on those names?
Well, I like them both. I like GM because it's been undervalued for a very long time. The CEO, who's been on board there for quite a while, is an engineer. She's a automotive expert, in the true sense. She can tear them apart and build them back, put them back together, and she's very popular in her industry. I also like Ford as a worst to first kind of play. Apple, on the other hand, it deserves to be at an all-time high. The AI boom has created a significant market concentration, certainly. Apple is a major component of those 7 big leaders, the Magnificent Seven, but it deserves to be at these levels, in my view.
All right, and then here we are approaching the holiday season. Hard to believe. We got October winding down. Halloween, as you noted, is a big retail holiday, by the way. Then we got Thanksgiving and Christmas coming up here before you know it. And ahead of all this, we see Target, one of the big retailers, announcing it's cutting nearly 2,000 corporate jobs as the retailer tries to get back to growth after 4 years of roughly stagnant sales. Right before the holidays, Target looking to eliminate all these positions. What's your reaction to that? What are your thoughts on Target, and how would you size up the retailers heading into the holiday season?
Well, I generally like them here, Frank. This would be the time to buy them. Maybe now that many of them are soft price-wise, you generally wait for the sales when you go to a retail store, and many of them are on sale right now. But there were, as I mentioned, 34 business cycles between the mid-1800s and today, each full cycle lasting about 56 months. And, we're just due for the tide to go out here. Plus, we've seen some subprime lenders default. We had a big bankruptcy with Prime Lens Capital Partners, a lender that's used by car dealerships to make subprime loans. And then there were several others just last week that have affected some major banks, including J.P. Morgan Chase. So, these are indications that the economy seems to be weakening.
On the air live with Gabriel Wisdom with American Money Management and author of Wisdom on Value Investing. Anything else that's gotten your attention? Intel jumping, looks like after hours here by about 7% on better than expected analyst expectations here. So that one, of course, made news this year with all of us now owning Intel based on government investment. What about Intel here?
Well, Frank, Intel shares have risen about 85% so far this year. Sentiment has really switched since the government took an interest, and now you've got stakes by Japan's SoftBank, and of course the AI chip giant NVIDIA. All of a sudden everybody's willing to play ball with Intel. So far the government has taken stakes not only in Intel, but some of the big rare earth manufacturers. There's Lithium Americas, Trilogy Metals, MP Materials. There's one more I can't think of right now, but and they're talking about taking an interest in some of the quantum computing stocks. Those jumped have to be careful here because just because we take a stake or a future stake in public companies doesn't mean they'll succeed. It just means that we like the technology.
All right. At this point, Gabriel Wisdom, any specific places where you are putting money now and or taking it off the table?
Well, given all the geopolitical uncertainty today, the defense stocks have really shrugged off the government shutdown. And you see it in the exchange-traded fund that represents most of the big defense and aerospace players. The symbol is ITA, India Tango Alpha. And we're talking about companies like GE Aerospace, which is now up 83% a year to date. There's Northrop Grumman, there's Boeing. I mean, these companies were left for dead a year and a half, 2 years ago. So I'm a big believer in the worst to first cycle that occurs time and again. But these companies have a lot of momentum right now, especially in light of the geopolitical uncertainties and now the Russian sanctions and talk about a World War III. I hope that's just nothing more than the narrative they're giving.
Right, and then there's Venezuela. Looks like U.S. military moves in the Caribbean getting attention as well. And as we discussed earlier this week with one of the top oil analysts, it'll be interesting if the U.S. Takes action there in Venezuela and what that would do to potentially also pump up oil prices. So we're keeping an eye on a number of things here, just at a time when the Middle East is simmering down. These other areas are flaring up. One last thing I wanted to mention, the home sales up in September to a 7-month high. We are watching mortgage rates drop, and we'll be talking more about that later this hour. Looks like the home builders got a bit of a bounce today. Gabriel Wisdom, would you touch any of the home builders here now, and what's your outlook on mortgage rates?
Well, I would get involved in the home builders, and I think mortgage rates are likely to go a little bit lower, not a lot lower, but just lower in the sense that it'll make first-time home buying more affordable for the millennial generation. I like the home builders exchange-traded fund. I've been looking at this long and hard because most of the public home builders have cracks in the foundation, so to speak. The exchange-traded fund that I like has a symbol NAIL, N-A-I-L. It's down about 50% from its highs. That tells you it seems to be on sale. Everybody needs to live somewhere.
As always, Gabriel Wisdom, you nailed it. Again here this afternoon, live with us here, covering all the bases on the markets and the economy and the whole works here. Gabriel Wisdom, Managing Director of American Money Management, based right here in Southern California. Also author of Wisdom on Value Investing. Gabriel, it's always great to have you with us. Thank you very much for joining us live this afternoon.
Thank you, Frank.
Out to the freeways now, 790 KABC. There it is. Mottek On Money continues, 790 KABC. Good afternoon. U.S. Air Force flying Air Force B-1 bombers near Venezuela today, stepping up pressure on President Maduro in Venezuela. We're keeping an eye on developments there. The stock market moving higher today, with the Dow closing up 144 points at 46,735. The S&P 500 of 39 at 6,738. The NASDAQ of 201 at 22,942. And what's been a volatile week, the volatility index today did give back 7%. The price of gold, which took that big hit earlier this week, is back down to around 4,137 here at the moment. It has rebounded about $100 from the recent low. We see silver at $48.53 an ounce, platinum at $1,591 and change. We'll talk gold, silver, platinum, and the whole works coming up shortly with Barry Stuppler at Mint State Gold and Stuppler and Company here in Southern California. Bitcoin right now down about 160 to 110.107. Ethereum at 38.46. Solana at 190. Doge at the moment at 19 cents. Taking a look at Intel, it moved higher today by $1.24 at 38.16. Appears to be moving higher in after-hours trading. BITO, the Bitcoin ETF, of 40 cents at 18.16. Tesla up 10 and changed to 448.98. GM slipping from record highs, down 46 cents at 66.85. Apple kissing record highs this past week, up $1.13 today at 259 and change. The magnificent one, NVIDIA, up nearly 2 at 182.16. And now the latest news on 790 KABC.
Hey, Bruin fans, want to go behind the scenes with your favorite teams and athletes? How about getting exclusive merch and opportunities to enter sweepstakes like sideline access at the Rose Bowl? Introducing Blue and Gold Society, UCLA Athletics fan membership program created to support Bruin student athletes. Members receive benefits like exclusive gear, videos featuring insider stories, and incredible experiences courtesy of UCLA Athletics. Sign up today at blueandgoldsociety.com.
The United States Soccer Federation presents the U.S. Soccer Podcast.
Searching for an inside look at the people, stories, and passion that fuel the state of soccer in America?
Who's going to be the key man for the U.S. men's national team?
First and foremost, they need to win.
There's something so fun about being the underdog.
You're playing with house money almost.
But what does this success mean for the future of U.S. soccer?
Ooh, you're getting deep now.
This is where soccer will come to life.
The U.S. Soccer Podcast. Follow and listen on your favorite platform.
Mottek On Money continues, 790 KABC, an epic week in the precious metals, with gold making a run for a record high at around 4,400 an ounce and slipping back down to about 4,000. Yep, gold still hovering above 4,000 an ounce. That itself is still pretty big news. Silver also taking a hit, moving up to around 53 or so an ounce and pulling back below 50 now. We're also watching the price of platinum very closely. Looks like gold prices rebounded today, hovering at around 4,100 an ounce. Following all of this very, very closely, gold's wild ride. Barry Stuppler is with us now, founder of Stuppler & Company and Mint State Gold in Woodland Hills, former president of the American Numismatic Association. Barry, thank you very much for taking the call, and it's been a head-spinning week in the precious metals. Give us your thoughts on what's happened this week.
This has probably been the most volatile trading days since Monday that I've seen since 2011, and gold was half the price. Now, all of a sudden, what we saw on late Monday, early Tuesday, was a major sell-off in China. And there was a real bull-bear war, and that's when they got it down to $4,003. And if they could have busted through 4,000, they probably would have seen a lot of stop loss, a lot of margin shorting, and things like that. But it didn't happen. It held above 4,000 and then started coming back gradually. Today, as you said, it's over 4,100. But this is exciting when you see the market on gold moving up to 4,380, then down to 4,003. That's an 8.5% correction in just 4 days. That's incredible. I mean, and the volume on all these exchanges around the world. I mean, there's 4 major exchanges: the one in London, the one in Hong Kong, the one in Mumbai, India, and the one in New York. But there are about 3 or 4 other ones that trade very actively, like in Australia and so on. But all these exchanges were very, very active with lots of volume, record volume in many cases, to deal with the volatility. And as far as profit taking is concerned, that's what started the drop. There was a lot of profit taking, and then it was followed by a lot of the professionals that were short selling, because when it breaks below support, the professionals hop in. They're in there for a day or two. They short it, and then they hope to cover. So it's just an interesting time. And at the same time, a lot of these exchanges have lifted their margin requirements so they could slow down all the speculation. But it's incredible. Our website, Mint State Gold, and our investor section, our investor guidance section, has in some cases were just incredible in terms of people just trying to find out what was going on. So it's an exciting time right now. I don't know if I'm getting too old for this, but can I tell you, I really enjoy watching it.
That's exciting. Well, good for you. And I was on your site today earlier, as a matter of fact, and you also tracked the price of silver, which popped above 50, hitting record highs just in the last week or so. Let's not forget about that one. And now pulling back below 50. What about silver here?
Well, silver reached a high of 54.43, and then recently it's hit a low of 47.48, which is about a 12.5% correction. And they did break. I mean, 50 was a key level, and breaking below 50 meant the bears won that war, and they got it down to 47.48, where a lot of speculators and long-time investors came in and started buying it. Right now, silver's around 48.80, so that's up about $1.40 from the low, and we're starting to see more investor interest. However, to stay back on the bullish track, we need to get silver above $50. 50 is a very key level for silver, like 4,000 is a key level for gold. So if we can get silver back above $50, sometime by the early part of next week, it would be back on a bullish track. But until then, it's going to probably trade in that level unless we see a rally in that market.
Very interesting. And, of course, the last time silver was at these levels was back in 1979, 1980. And, indeed, silver blew past the previous record high seen back in those days when there was some hanky-panky going on, right, in the silver market at that time where some people try to corner the market on silver. Is there any hanky-panky going on this time around?
Well, the last time silver got, 2 times ago, silver, you're talking about the Hunt brothers.
Yes.
And the Hunt brothers tried to quarter the silver market in 1979, 1980. And what the exchange did is they lifted the margin requirements, which pretty much killed that rally. But silver got up to 49.94 in 2011 on very heavy volume, and then just fell apart with gold at the same time. So it's been around this level twice before, and if it can break above 55 or even 60, then that would be extremely on a bullish track. But right now, it's got to fight to get back above $50, which could be an interesting fight right now.
Interesting. And what about platinum, which has also seen quite a bounce this year? Right now, hovering just below 1,600 at last check. You probably have an even more accurate number in front of you there. What about platinum?
Well, platinum got up to a little over 1740, and it got whacked when the metals drop. Particularly gold has basically been the leader. Sometimes silver takes the lead spot, but most of the time it's gold. And if gold gets hammered, you'll see platinum and palladium get hammered also. And platinum was trading when gold was at 43.80. Platinum was 1740 and change, and that was the highest it's been in years. But all of a sudden, when the selling came in, the exchange traders, the professional commodity traders that are on the floors in all these major markets, they look for an opportunity. If one market's dropping, they're going to short all the precious metals and then hope to cover on and make a profit. And they're mostly short term. It's typically they'll sell it into the market. It's called shorting into the market, and then they'll cover by day in or by the next day. But they rarely go to more than 2 or 3 days. They're just looking to make a real quick profit and turn around based upon the trend of the market. So platinum has looked good. It will probably still remain good if gold stays healthy here, and the same thing with palladium.
They're live with Barry Stuppler, former president of the American Numismatic Association, founder of Stuppler and Company, and Mint State Gold at mintstategold.com. I went on the website, your website today, Barry, and all of this, of course, what we've been talking about is reignited interest in coin collecting. That's where the numismatic part comes in, and you're an expert on all that. I see on your website you have a penny going for $4,600. What makes that penny that valuable, and what are your thoughts about coin collecting these days?
Well, that penny is an SPDB. It's a coin that was made in 1909. But the interest right now we're seeing is in mostly gold and silver coins. Silver. The most popular series are the Morgan dollar, the Peace dollar, the Walking Liberty half, the gold $20 St. Gaudens, the gold 20, and many gold type coins. And some of them go back. I just sold to a client a $17.99 $10 gold piece for $250,000. Wow. It was a beautiful MS64 plus coin. I mean, you're talking a piece of history in your hands, and that's what most people that are investing in high value, rare gold and silver coins want. They want history in their hand and something that has a track record of appreciation.
Wow, that sounds terrific. And anything else? Any new offerings, or what are the people clamoring for nowadays? Given the price of gold and silver hitting record highs, as well as platinum on that big run up recently. Platinum, by the way, well off its all time high. Might we see a record high for platinum anytime soon?
It's going to have a lot of it depends upon gold. If gold can continue on, like I originally projected that gold would be 4,500 by year end, I'm still staying with that, and 5,000 by the summer of next year. If gold can get back above to the 4,500 range, yeah, we could see platinum hitting 1,800. I don't think it will get over 2,000, and the record high is substantially, remember, higher than that. But right now, most of the buying is coming out of central banks, and central banks are primarily buying gold, secondarily buying silver, but for the exception of the Russian central bank, they don't own much in platinum. So platinum is not necessarily desirable. And when you see the runaway from the U.S. dollar, which we're seeing worldwide with the central banks, they're exchanging the dollars for gold or other currencies, but they're not necessarily buying platinum. And that's what really fuels the rally is central bank buying, and they're buying at a record pace this year.
All right, and what are you seeing, given what's happened recently? Are people buying or are they selling?
We're getting a little bit of both. I mean, when gold broke above 3,500, we saw a lot of selling. When gold got above 4,000, there was a reasonable amount of buying. Just here recently in the last 2 or 3 days, we picked up a lot of new buyers, a lot of people that were recommended to come in or to call or to get some advice on what they have. And if we can help them, we help them. But let me tell you, we've been trucking. I mean, it's been a very exciting and very busy time right now.
Selling like hotcakes. That's pretty amazing, Barry. Well, it's always great to speak with you on this exciting topic nowadays. So thank you very, very much for taking the call. We'll continue to follow this with you. That is Barry Stuppler, founder of Stuppler & Company and Mint State Gold at mintstategold.com, and Woodland Hills, former president of the American Numismatic Association. Live with us here on Mottek On Money on 790 KABC.
Hey, Bruin fans, want to go behind the scenes with your favorite teams and athletes? How about getting exclusive merch and opportunities to enter sweepstakes like sideline access at the Rose Bowl? Introducing Blue and Gold Society, UCLA Athletics fan membership program created to support Bruin student athletes. Members receive benefits like exclusive gear, videos featuring insider stories, and incredible experiences courtesy of UCLA Athletics. Sign up today at blueandgoldsociety.com.
We are the musers on the pod so far. We've discussed people we love.
I didn't tell you guys. Cuban emailed.
What are you wearing?
Well, no, that's not.
Things we love. Got way into typewriters.
How many typewriters do you own?
Let's not podcast anymore.
Just guesstimate.
It's time to get really down and dirty.
These are great ideas. Start a podcast and then forget to promote it on social media.
So,
what is our podcast about? Yeah, whatever we feel like.
The Musers, the podcast. Follow and listen on your favorite platform.
Mottek On Money continues, 790 KABC. Looks like mortgage rates have suddenly hit the lowest we've seen so far this year. And home sales rose in September to a 7-month high. Let's bring in Jeff Lazerson now, the president of MortgageGrader.com, also Orange County registered real estate columnist. Jeff, thanks for joining us. And how are the rates looking here today?
Frank, thanks for having me. Rates are looking great. The 30-year fixed is at 5 5/8% at one point. The 15-year fix is under 5% at 4.99% and 1 point, and that's up to 806,500. The high balance that goes 806,501,000 to 1,209,750 in LA and Orange County. The 30 years at 5 7/8, and the 15 years at 5.49. And of course, the Freddie Mac rate today landed at 6.19%. So things are looking promising, very promising.
Lowest of the year, right? And where do you see the rates go from here?
Yeah. So it's a great question. What the rates are going to go a little bit lower, I think, than what they are now. I'd say they'll end the year in the low fives, and that's the dilemma for most buyers and most refis right now, because we have a Fed meeting next week, and it's all but certain that they'll drop rates a quarter point, and indirectly the long-term mortgage rates, indirectly affected by the Fed rate, not directly affected. But so people are thinking, well, let's wait until next week, and then there's probably going to be another Fed rate drop in December of another quarter. So people are saying, well, maybe I should wait for that to buy or refi. And then, of course, the Fed term for Jerome Powell ends the end of January. So then other people are saying, well, President Trump will get somebody in there that'll have lower interest rates. So maybe we'll wait until, after January. So there's a lot of thinking going on like that, people waiting to pull the trigger.
Interesting. I've been talking to some real estate people, and activity seems to be pretty sluggish out there. What is your assessment of home sales activity here at the moment?
Well, it got goosed pretty good in the last month or two as rates had come down. I mean, it is slowing down again because I think partly because of the seasonality, that part of it's the holiday season, and part of it is what I just alluded to about people waiting. So it is slowing down, but it was certainly good the last month or two. And I keep seeing the same thing over and over again. people are out looking, and if they find the property that's really a cream puff turnkey that they want, a lot of people are pouncing on it, and it gets into bidding wars. So if the property is tired or if it's overpriced, there's a lot of overpriced properties out there right now. Those are just sitting, but priced well and looking sharp, it's going to go, and it's going to get multiple offers every time.
All right. And you're tracking, of course, what's happening in the fire zone areas as well. And you've written about it, too, in your columns. What about those areas and land sales and people throwing in the towel and so forth?
Well, we are seeing a lot more people just selling the land because they just don't want to, deal with I don't want to call it grief, but I guess it is grief. Just deal with the hassle factor of doing it, and building a house is a super complicated thing. I mean, even if you're a seasoned construction person, there's a lot to it, and a lot of people just don't have the intestinal fortitude to want to do it. So there a lot of them are just selling the lots and let somebody else deal with it.
They're live with Jeff Lazerson, the president of MortgageGrader.com and Orange County Register real estate columnist. And we did get that new reading on home sales just today that they did rise in the month of September to a 7-month high. What else needs to be done, you think, to turn real estate around?
Wow. What a question. I mean, the problem that we have in Southern California, I don't know that we can solve it, at least here, because there's so little area to build in. We desperately need more housing units, and they're building ADUs, and now they're going to build stuff in those metro transportation corridors and stuff. But I would say that lower interest rates are going to cause prices to spike again. So it's the affordability crunch it's just it's so complicated. I don't know that there is a solve for this, Frank.
In the meantime, how tough is it to get a mortgage nowadays? And now that the mortgage rates have hit a low for the year here, that's getting to attention.
Yeah, it's not too tough. I mean, either you have the income or you don't. And if you don't have the income, there's a bunch of alternative programs, like for some borrowers that just can't document the income on tax returns. I have this loan called Fog the Mirror that, basically you have good credit and you have 20% down. We put no income on the application. We put no job on the application. Rate's pretty high, but, people that can't document their income, they'll go to that loan every time. So it really isn't that hard to get a loan. The question is getting the loan is one thing. Can you afford the monthly payments? That's really the big issue, because it's crazy. I was just talking to a borrower right before the show, and he's on $1,250,000 loan on the place that he's buying. He's going to have like a $9,000 monthly payment, on $1.2 million loan, and it's just staggering. And we were
for a doghouse.
Yeah. How are we going to afford this? So it's tough out there. I don't envy anybody trying to buy in Southern California. It's one of the most expensive places in the country.
Of course, fog the mirror loans, that's an expression we heard back during the financial crisis days and the mortgage meltdown. Now, it sounds like a badge of honor now. Do you have a mirror in the office, and how do those work?
Yeah, that's right. I invite the client in, and they sit at my desk, and I put the mirror up, and if they fog it, they get the loan. It's that simple.
See it tonight, read about it tomorrow, but hear it now on Mottek On Money, live on the air with Jeff Lazerson. Now, that is fun, Jeff. You should probably get maybe special mirrors, maybe even handheld if it's not on the wall or something.
You gave me an idea to take that out to the realtors. I'm going to do that. What a great idea.
What's coming up this weekend in your column?
Oh, this column, I talked about this thing that I talked about earlier on your show today, is the people trying to time either the refinance or the purchase, knowing that there's going to be 2 Fed rate cuts this year, and knowing that we're going to have a new Fed chairman. So and all the angst that people are going through over that.
Or what about adjustable rate mortgages nowadays with the anticipated Fed rate cut next week, which will impact the Fed's benchmark Fed funds rate? That'll impact the prime lending rate charged by major banks, and that would bring down the adjustables, right?
Absolutely. And even right now, I have an adjustable down at 5.5% for 5 years. So some of the adjustable programs are looking good, but 5.5% on an adjustable, and I can get you, an eighth higher for a fixed, you're still probably better off getting the fixed rate mortgage today. But if you're going to be in the property, for a short period of time, you can do an adjustable without points versus a fixed rate with points. So if you're a short timer, adjustables are good.
Jeff, thank you very much for taking the call live with us here. That's Jeff Lazerson, the president of MortgageGrader.com, an Orange County registered real estate columnist, live with us here on Mottek On Money on 790 KABC. Stay tuned now for the News Blitz, and then at 6, it's the Union Rescue Mission program. I'll be back on the air at 6 right here, 790 KABC.
Bruin fans, fall is finally here. That means UCLA football is back in your life. Head out to the Rose Bowl to enjoy America's best tailgating and to make more unforgettable memories with the Bruins. Nico Iamaleava and the Bruins are ready to make an impact this year, and we need you cheering them at the Rose Bowl. Visit UCLABruins.com or call 310-UCLA-WIN to lock in your tickets today. 310-UCLA-WIN.